as we round out a truly great year for the S&P 500, up more than 27%. I think it's worth pointing out that the company behind the benchmark index, S&P Global, has given you a 60% gain over the same period. Now, S&P Global is mainly a ratings agency. They're one of the big three in the credit rating space, but they also run all the S&P Dow Jones indices. And by the way, they have a market intelligence division that provides money managers with the data and analytics tools they need to do their jobs. It makes sense that S&P Global will be having a huge year, but this stock has been performing long-term unbelievably, 200% over the past 5 years. What's the secret to the success? Let's take a closer look with Doug Peterson. He's the president and CEO of S&P Global, to learn more about how his company's doing, where it's headed. Mr. Peterson, welcome back to Mad Money. Wow, hey,
Doug,
Jim. Good to see you.
Great to see you.
You have been doing some amazing things. First, just want to get the numbers. Last year at this time, very, very tough. Not a lot of issuance. Things have changed quite a bit, haven't they?
Yeah, this is an exciting time to be here. The economy has been moving along. In addition, if you think about the AUM's growth, the S&P 500, Dow Jones, the ratings issuance environment, low interest rates, all of these things have been tailwinds at our backs.
And one of the most amazing things is how prolific you've been with new indices that are really in demand. The one I found most fascinating, because we had Robinhood on last week, 10 million new investors, ESG. You're the leader, aren't you?
Well, ESG, environmental, social, and governance, this is a field that people really want to know more about. The investors are looking for new solutions. We've been building ESG products across the entire portfolio. And this year we launched the S&P 500 ESG Index. It's up and running, and it had a great start.
Now, how do you make the judgments? Because some people feel it's too subjective.
Well, we base it on facts. It's like everything we do in the company. It's always about transparency and always about fact-based analytics. We added a couple of companies to our portfolio a few years ago. We bought TrueCost, which is the best company when it comes to the E part of ESG. Okay. And we've just announced that we're going to be buying Robeco Sam's ESG ratings business. And so we're bringing in the right portfolio, but it's about facts and it's about transparency.
You have done some amazing things with this acquisition of Kensho. And and you've also tried to, I think, do something that is unbelievable for funds, which is you actually talk about you rate the words within a conference call, and that helps people make a decision.
Well, what we did is this was something where it was one of our internal teams, their data scientists. They looked at all of the transcripts and started listening to words that are positive words and negative words. And we built something called TDA, Textual Data Analytics, that listens to earnings calls and then basically gives you a little meter. Is it green? Is it red? Is it positive? Is it negative? We look at to see how is the language in the prepared remarks versus the Q&A. Does a company prefer to only let the analysts to have positive views ask the questions, or do they let everybody ask questions?
Doug, I've been watching and reading these ever since they started. And I read this in your conference call, and I said to myself, holy cow, I'm doing it all anecdotal. You're doing it empirically. This is a brilliant service.
Yeah, this is something that our team built. They're excited about it, and we've seen really good response from the investment community.
Incredible. China, you're moving there, and everyone's running from China. You're doing more to understand and make China transparent than any entity on earth.
Well, we believe that the Chinese financial markets are going to go through a really dramatic reform. If you think about the aging population, the need for pension system, for institutional investors, they're going to need the analytics to be able to support that transition. And we're on the ground floor with a 100% owned rating agency.
Amazing. Just not interfered by the government. You own it 100%.
We own 100%.
Which is something that we're hoping will happen with this new trading agreement, that others will have that.
Well, in fact, that's one of the indicators that I'm watching very closely to see who else is getting licenses to either own 51% or 100%. There's a few banks that got there. There's a couple of different asset managers that are starting. We were one of the first ones, but I think that this is really the beginning of an open financial system.
Well, that would be something great. Debt coming due, gigantic amount, right? And that's good for you.
Next 5 years, there's a very large amount of debt on people's balance sheets, which is going to be maturing. If you go back to the 2011, 12, 13, 14, it was 7-year debt, 10-year debt. It's on balance sheets. The interest rate environment is very attractive. Not only are rates very low, spreads are also very tight.
Now, some people on Twitter, when I mentioned that you were on, said, ask them about whether there are people aggregating auto loans and whether that's something he's worried about, given the fact that there's been too many auto loans and not a lot of rigor.
Yeah, there is after the financial crisis at our rating agency, we looked at all of the different criteria and practices to ensure that whenever we securitize something like auto loans, that we look to the underlying quality of the loans themselves. Do we include loans that were cash-based buyers, et cetera? We've eliminated those kinds of practices from the securitization. And so we're watching this very carefully. It's on our list as one of the areas that we're watching very closely.
Oh, good, because I know that you can have, your credibility is so high, you could do a lot. Now, another one that you're interested, the sulfur cap. You're even looking at things environmental and how important they are. Big sulfur cap, it's going to matter a lot for cruise ships.
Yeah, there's something called the IMO 2020. It's a change in the rules requiring shipper bunking fuel to reduce the amount of sulfur or put scrubbers on their ships to reduce the amount of sulfur. So we have, through our Platts business, we put in place a new assessment that's called the 0.5 sulfur bunker fuel. And so we're out there in the market ensuring that they're going to be ready to change those rules when 2020 rolls around.
And you're even doing LNG. You're doing work with LNG to be sure we're the ratings for that.
Yeah, LNG is one of those markets. It's a really critical transition fuel. It's a lower component of carbon compared to fuel oil or other types of coal, things like that. One of our great successes was the Japan-Korea marker, which is now the LNG price for Asia. It took us about 7 years to build that, but we're now have it embedded in the workflow in Asia.
You're a remarkable man. You've done some unbelievable things. Congratulations on all the way you've taken a very kind of state organization, and you're really you're putting rigor on so many industries that didn't have it. Congratulations.
Thank you so much.
Okay, that's Doug Peterson, President and CEO of S&P Global. Stock that we've liked literally from when Doug took over. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.